Not planning on making this video, but I really feel like I should because it seems like that Binance is collapsing, or at least the probability that Binance may collapse is rising very quickly, it seems. At the very least, we know that Binance Token is collapsing. In this video, I'm going to talk about what Binance Token is, why it seems like it's in trouble, compare it to previous examples of similar tokens of the same kind, look at charts comparing the past and the present, look at market cap, look at in terms of Tether, a few other charts to help give the understanding of what exactly is going on, and then help you understand what you should do about it, whether you own Binance Token or not, whether you're in Binance or not, whether you own Bitcoin or not. What does this mean for you, and what are the implications for the future? So, not a fun one, but let's get to it. So, what is a Binance Token? Well, first we have to establish Binance is an exchange, and Binance Token is the native token of that exchange. This is the chart for Binance Token here. We can see that it is falling pretty rapidly here. This is a one-day chart where we see it was pretty stable yesterday, and now it's coming down again. If we zoom out, obviously, this becomes a little less dramatic as it's been falling continually for a while now. If you go out for the month, it's the same thing, especially in the last few days here. Since about August 14th, it has been falling rapidly. If we go out to a year, we can see it's been chopping around this place until June of this year, so midsummer this year. And if we got to all time, we see a chart that is very eerily similar to a similar one over here, the FTX token chart, especially if I can figure out what I'm doing here. Especially if we look at it from that perspective, looks a little eerily similar. Now, why is that? First, we have to establish what FTX was, what the FTX collapse was. See, FTX was another exchange, and what they were doing was that they were fraudulently creating a token out of thin air. They were saying, hey, we have these magic numbers we made up. You can trade these magic numbers. They give you certain utility on our platform, and you can do whatever with them, and they have value. And so they would create these artificial tokens, back these tokens with other assets that they own, including Bitcoin and other assets, and say, look, they have value because we're backing them. We're going to borrow against them. We're going to collateralize our loans with these FTX tokens. And that worked for a while until suddenly it did not. And the whole thing fell apart. Why? Because it is a centralized institution creating numbers out of thin air here. See, FTX really blew up in 2019, 2020. It grew in value. And then here, these last few days here of the collapse in 2022, I was warning my friends and people that I knew had funds on there to get out because the probability that the whole exchange goes under was high, and it was high enough. Basically, they had taken Bitcoin from people that had deposited funds there in a deceitful, fraudulent way and defrauded their investors or unsecured creditors. And so while obviously I don't work at Binance and obviously I'm biased against Binance and everything, it seems a little eerily similar with what's going on here. Likewise, Binance Token is a token made up out of thin air. It's one of the largest quote unquote cryptocurrencies out there. Been in the top 10 for years now. And what we see here, same thing, 2019, 2020, 2021, Binance really becomes a major exchange. And now it is sitting here at 210 US dollars per token, and which is very critical support here. We last saw this in June of 2022, which was a major blowup of Terra Luna, which was in a different way, same idea, but done differently. Luna wasn't an exchange, but that's a story for another time. But that's what we have today. That Binance Token is it's on the edge here. And so if we were to overlay these charts atop each other, on the top here we have FTX's token. We have the FTX exchange loading up their bags. The bags being of their FTT tokens. They pump up the value of the token to sell it on people in order to acquire things that they perceive more valuable, like cash, like US dollars, like Bitcoin. And then they distribute it. They put it on life support here as the fraud begins to come to light, and then it just collapses here in the end of 2022. If we compare it to BNB, obviously this red line has not occurred, or at least not occurred yet, and it's pretty similar here. We see it pumped up, we see it on life support here, and now it looks like it's in trouble. This chart, or this little annotations from one of my friends, Mitch over here. But let's see. Oh, my computer's not cooperating. Here, if we look from another friend of mine, Dylan, if we look at Binance, that's BNB here, in terms of Tether, which is USDT here, which you can also just think of USD, it's the same price, roughly speaking. We see that Binance token is nearing these lows. And if we look at it in terms of Bitcoin market cap and not in terms of US dollars, we see a similar thing, that Binance, for whatever reason, is viciously defending this level, this 205, 210, 212 US dollar level of their token. And we saw this with FTX. We saw FTX viciously defend certain price levels. Why? Because they had collateralized loans at those levels, and they would do everything they possibly could to maintain trust in the system and maintain people's faith in the system for as long as possible. And so I don't know if Binance goes under. I don't know when, but I do know they are defending this level, and they are defending it very strongly, and they have been for a very long time. Here's a chart that emphasizes that, again, from my friend Dylan here. But if we look at swaps, this is on the logarithmic scale here, so you have to keep that in mind. But we can see this level has been viciously defended by Binance. We had a level that was defended way back here years ago when Binance token was significantly cheaper, over 10x cheaper. But now we have it here when Binance is significantly larger, it's hundreds of thousands of Bitcoin, or at least that's what we believe that they have. And now they're teetering at this level. And if it goes below there, I think the probability rises dramatically that they'll have major liquidations. And if they have been fraudulently misplacing Bitcoin, misplacing customers' funds, your Bitcoin may be gone. It may not exist. So again, to reiterate, please withdraw your Bitcoin from Binance because we do not know what we do not know. And I do not know, but I do know that most people do not know. And so you should probably get out of there. How much Bitcoin does Binance have? That's a great question. Let's take a look. In the black line, we see Bitcoin, its price, the logarithmic scale over the last 10 years, it going from a few dollars to a few $100 to a few $1,000, now a few tens of thousands of dollars. And this massive green hill over here, or this cyan or whatever color, blue, I guess, is Binance. These are all the tokens, or all, excuse me, the Bitcoin that Binance has. So they have roughly 600,000 Bitcoin as of today. We see that this amount has continually gone up, and especially went up in 2021 over here when Binance the exchange was going parabolic. It went from roughly 250,000, a third of a million Bitcoin, doubled well over 500,000 Bitcoin now. And so are all those Bitcoin there? I don't know. I have no idea. I'm sure people much more informed on the subject and spent much more time looking into Binance's financial records and everything would have a much better idea of how big the hole is, if there is a hole, but it seems like there could be. So again, exchanges you can basically think of as banks. If you have a bar of gold and you go to a bank, you need to trust the bank to put the gold in their safe. This is the inherent problem with trusting centralized authorities, is that now it's not just your gold that has its own merit of risks, but now you are trusting the centralized authority to manage that gold, protect that gold, steward that gold on your behalf, and often you pay them fees. This is how you can think of exchanges. Exchanges basically are like banks for your Bitcoin. They buy the Bitcoin in mass and they sell it to people when they want to buy it. So if you want to buy Bitcoin from an exchange, if you want to buy Bitcoin from Binance, sure, go ahead, go for it. You pay them a fee, just like you pay an analog bank a fee when you buy their analog gold. But the problem is when the bank becomes corrupt, when the bank becomes distorted, when the bank begins issuing their own paper gold, their own paper token, their own paper currency, more than the gold that they have back on their safe, this is the precise problem that begins. They will defend the value of that paper gold as much as they possibly can until suddenly the market figures it out, there's a bank run, and the gold just simply isn't there. And I've said this repeatedly in multiple speeches now, in many of my talks, is that unfortunately, you cannot have everyone escape whole from a bank run. Most people did not make it out of FTX until it was already in free fall. And likewise, unfortunately, most of you watching, if you have Bitcoin on Binance, the statistical probability you will make it out, I think probably is low. And so if we can assume that it's low and you still can get out, you should get out right now. Do it. I know most of you watching, this probably doesn't apply to you, but if just 1% of you watching have your funds on Binance, please heed my warning and get out. okay, this is not anything against Bitcoin. This is not the end of Bitcoin. If Binance does go down, Bitcoin will probably go down in terms of US dollar. The media will have a field day and say, oh, look, Bitcoin's dead. Look, it crashed down below $20,000 or whatever. You know, they'll have a field day. They'll say, oh, Bitcoin's dead. When the Bitcoin people have been pounding the table all along saying the whole purpose of Bitcoin is that it's peer-to-peer electronic cash. You don't have to trust a centralized party. And this is the problem with political money. With political money and all of the forms of money, including gold, including silver, including copper, including salt and grain, all the way back in the ancient days, the ultimate fundamental problem with all these forms of money is that you have to rely on a centralized authority, political currency. You're relying on a couple dozen lawyers, politicians, and lobbyists in Washington, D.C. to manage the soundness of your money, to manage the fractional reserve system of your dollars, euro, yen, peso, whatever. The problem with gold is that you have to have it in banks. The problem with all these other currencies is you have to have them in banks. And so if you have your Bitcoin on an exchange like FTX or like Binance, you are introducing that extra layer of risk. And so you better have a good exchange that is reputable and that is regulated, because that will give you the longest possible amount of time to learn and prepare and take custody of your own money. And so if you have Bitcoin in any exchange, it's probably a good idea to get it out as soon as possible and as soon as you feel comfortable taking it out. Obviously, it is more important that you learn how to self-custody your keys properly before taking it out, but you should learn that as quickly as possible. And if you have a Binance, it is especially urgent. If you don't feel comfortable taking your own custody, just get it off of Binance onto a different exchange as fast as possible. Get into a hot wallet, get it in some form of temporary storage as you learn long-term storage, proper etiquette, let's say. So one more final message of people as we go here is that this will not be the end of the story here. Binance is just the beginning, because Binance, on the very tail end of risk, is a extremely speculative, unregistered, everything bank. That's the way you can think of it. But we have many other banks in the world. This little diagram here is showing banks in America over time. We have a timeline here on the bottom, and the size of the circle represents the size of the collapse of various banks in America. Now, if you'll notice anything, you'll see a massive spike in 2008 with the Great Financial Crisis. You'll see Washington Mutual Bank, $307 billion, and a whole bunch of banks following suit, smaller banks, regional banks, everything of the sort, in the Great Financial Crisis, 2008, 2009. And what you'll see here, interestingly enough, if you look over to the right, is you'll see three more very large circles. You have Signature Bank, Silicon Valley Bank, First Republic Bank. Oh, wait, Credit Suisse isn't even on here. Okay, there's a fourth bank that should be on here. This image is outdated. My apologies. It's even worse. But this is something to keep in mind, that many of the largest banking failures in American history have happened this year, and their size rivals that of Washington Mutual, which preceded the 2008 Great Financial Crisis. That's something to keep in mind. How much money do you have in your bank? How much of it is insured by the FDIC? What backs the FDIC? Is the FDIC itself a fractional reserve system? What happens if you have insurance on a fractional reserve system and the insurance itself is fractional reserve? That's something to think about. AIG from 2008, Lehman Brothers, that's something to think about. And ultimately, at the end of the day, what is the biggest danger of all? Well, I would argue it is most probably this. See, similar to an exchange, similar to a bank, what we have is political currency units. We have treasury bonds. Treasury bonds go to the banks. The banks give certificates to the Federal Reserve. The Federal Reserve gives profits to the Treasury Department. And the consumers are here in the middle. And ultimately, in the same way that Binance can create its own token, and all the users within the Binance network have to use the Binance token, in the same way that FTX can create its own token, also made out of thin air, that it uses to acquire hard assets and gives those tokens to its users. In a very similar way, if not the exact same way, the US government, the European Union, and every other fiat institution in the world is a political currency unit system that is backed by the barrel of a gun. Now, this is an innovation. This does work. This does work significantly better than barter. But the problem is, again, you are trusting centralized authorities on managing the scarcity of your money. The only thing that gives this magical series of ones and zeros any value is their relative scarcity. You only trust the dollar because you believe its scarcity in the future will continue, and that in terms of everything else, it will have some degree of scarcity compared to everything else. And so if for whatever reason that centralized authority has the incentive to dilute those currency units, they will. In the same way that FTX or the same way that Binance have the incentive to dilute their tokens for creating more loans, for getting more Bitcoin, for stealing from their users, in the same way, political institutions, we've seen again and again and again in history, they will do the same thing. The United States government has an incentive to debase its own debt. We have acquired so much debt over the last 50 years that we cannot repay it back. It is a 100% probability we will not be able to repay back our debt. And so our only two options are to default in real terms or default in nominal terms. Those are the only two probabilities. And it is a much easier choice for the US government to default in real terms. Okay, I was just reading an article this morning about how, well, it's an opinion piece actually, so it's perhaps not the most relevant, but it's still interesting to consider nonetheless here, that the narrative is shifting, and now we have this idea of adjusting our inflation target from 2 to 3%. And it needs to be emphasized that because most people are thinking in linear terms, they think that this is an increase of 1%. Oh, 2 to 3%, that's not a big deal, an inflation target, whatever. Okay, going from 2% to 3% is a 50% increase in the inflation target. Okay, a 50% increase in the inflation target. This is the narrative being put out there by Binance, a centralized authority. Oh, excuse me, I mean the U.S. government, the centralized authority behind the U.S. political currency unit system. And so we either have to do one or two things. This is and Paul, Mr. Brilliant Krugman over here, happens to agree. Oh, that poor man. I don't know how he has a Nobel Prize, but somehow he does. Anyway, long story short here, you should probably get out of Binance as soon as possible. And with bonds, you're a little safer. But over the long term, long duration bonds are not a good idea. And you should probably reduce your risk. Get out of fractional reserve systems. Get out of centralized authorities. Do not trust humans. Instead, trust the computers, trust math, trust decentralization, and get a little bit of Bitcoin and get off zero. Because if Binance goes under, it will happen very quickly, and most people will not make it out in time. And if you're watching this in the future and you still own bonds and Binance has gone under, you should really think about it. Okay, the Bitcoiners have been here pounding the table on FTX. We're pounding the table on Binance, and we're pounding the table on bonds even more than we're pounding the table on these things. Binance is tiny. FTX is tiny. Bonds are a really big deal. And so it's a really big deal that you get off zero, get some Bitcoin, take self-custody, and learn from the past to predict and protect the future.